Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly.
We're here to cut through some of the noise from the latest financial headlines.
Good to be here. Lots happening.
Definitely. So today we're going to zero in on three key areas from the April 21st English Daily Money Briefing.
Okay.
We've got the Middle East tensions and how they're hitting global markets, then Korea's new AI regulation plans, which sound pretty interesting, and also this imbalance in the semiconductor world.
Yeah, it's fascinating how they connect, actually. Geopolitics, tech regulation, supply chains, it's all kind of linked.
Exactly. Our goal is just to pull out the essentials for you, figure out the potential impacts. So let's start with the Middle East.
Okay.
This caution in global stock markets because of the Iran-Israel situation. Even without, a full-blown conflict, there's this risk-off feeling. What does that really mean day to day?
Well, risk off basically means investors get nervous. They start moving money away from things seen as riskier, like maybe some tech stocks, and into assets considered safer, government bonds, maybe more stable industries.
Got it. And we saw that play out in the Korean market, the KOSPI.
Yeah, exactly. The KOSPI reflected that. You saw energy and defense stocks actually go up. Maybe not surprising given the tensions,
Right.
but tech shares took a bit of a hit.
And oil prices jumped too, didn't they?
Yes, big jump. And that immediately raises concerns about, well, inflation.
Oh, so what's the ripple effect there?
Well, higher oil prices mean higher costs for almost everything. Transport, manufacturing, plastics, you name it. It acts like a tax, really.
Okay.
Everyone's watching the Middle East really closely
Uh-huh.
because it hits energy costs, obviously, but also supply chains. And especially emerging markets like Korea. It's wider than just the gas pump.
Makes sense. Okay, let's switch gears. Korea's AI regulation proposal. This sounds like quite a big move.
It really is. They were talking about mandatory audits of AI algorithms.
Audits. Wow.
Yeah, and giving consumers the right to get explanations for decisions made by AI, plus penalties if the systems are, opaque or biased.
That feels quite ahead of the curve, particularly in Asia.
It definitely seems that way. It's being seen as a leading initiative, showing Korea wants to be out front on, ethical AI governance.
And the idea is that this helps build trust.
Exactly. Analysts think it could really boost public confidence, especially in areas like fintech, where AI is growing fast. And it might also encourage more international teamwork on setting these kinds of AI rules globally.
Interesting. Okay, so from AI rules to AI chips, let's talk semiconductors.
Right.
The Korea Semiconductor Industry Association flagged a mismatch. What's that about?
Well, the core issue is you've got this huge demand, a shortage even, for the really high-end chips needed for AI.
The cutting edge stuff.
Exactly. But at the same time, there's apparently an excess, a glut of the older sort of legacy chips. So production isn't quite aligned with where the demand is booming right now.
So demand is shifting really fast towards AI applications.
Incredibly fast. It's reshaping the whole industry landscape,
Yeah.
creates challenges, but also, big opportunities for those who can adapt.
And the big Korean players, Samsung, SK Hynix, they're reacting.
Yeah, they're pumping more money into R&D specifically for these AI-focused chips. They have to.
But analysts are still cautious about prices recovering quickly. They said maybe not until late Q3 or even Q4 this year.
That seems to be the consensus, yeah.
Mhm.
It takes time to retool and ramp up production of these advanced chips. Park Ji-woo at Daishin Securities called 2025 basically a transition year.
A transition year.
Right. The thinking is that the companies that manage this shift quickly, getting ready for the AI demand hitting fully by 2026, they'll be the ones with a real advantage. It's kind of a race.
Okay, so summarizing the key takeaways then. We've got markets feeling jumpy because of geopolitics.
That risk-off mood.
Then Korea is stepping up quite proactively on AI rules.
Yeah, trying to set a standard.
And the semiconductor industry is in this major flux, trying to catch up with the huge demand for AI chips.
That captures it pretty well. It's a complex picture.
So a final thought maybe for our listeners to mull over.
Yeah, maybe just consider how these different currents, the geopolitical unease affecting investments, the new rules shaping tech like AI, and these big industry shifts like in semiconductors, how might they intersect, maybe unexpectedly, with your own work or interests?
Mm-hmm.
It's worth thinking about how these macro trends could create specific ripples closer to home.
Good point. Thanks for diving deep with us today. We'll catch you on the next exploration.